Good morning, and welcome to episode 143 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, October 11th, 2023. First off, just want to say that our thoughts and our prayers go out to the people of Israel amidst the fighting ongoing in the Gaza Strip. We hope for a very speedy recovery and no further loss of life. That conflict, that crisis, along with a decrease in Treasury Yields, they were about 4.8%, they have dropped to about 4.65%, and a slight weakening in the US dollar have all conspired to raise precious metals prices for the most part. Let's take a look at those numbers, and then we'll give you some thoughts on what's going on and what we can expect going forward. So over the past week, gold is up 2.8% at $1,874.90 an ounce from $1,823.60. Silver is up 4.3% to $22.13 from $21.22 a week ago. Platinum is up 1.1% or $10 to $888 an ounce from $878 an ounce a week ago. And palladium is the only loser in the precious metals complex. It's down 2.1% to $1,182 an ounce from $1,208 a week ago. With silver outpacing gold to the upside, the number of ounces of silver it takes to buy an ounce of gold, your gold-silver ratio, is down slightly this week to 85:10 versus 86.3 a week ago. And as I mentioned, the US dollar index is down slightly at 105.80. It was 107.07 about a week ago. Now, I don't want everybody to get too excited about the rise in the gold and silver prices. We tend to see this in times of crisis. We are in one now, and that tends to be fairly short-lived. Now, it has not overcome the damage inflicted by the pullback in gold and silver as a result of the rise in Treasury yields over the past few weeks, but we are trending upward at this time. I expect the crisis to give a short-term boost to gold, but long-term, I fully expect gold prices to stay subdued, if you will, to hold pat in range, waiting for either an elongated pause in interest rate increases by the Federal Reserve, or at some point, and some are looking for this as early as next year, a decrease in interest rates. Once that begins, once we see a decrease in interest rates, that's when things get pretty exciting for gold. In the meantime, I think you've got an extended buying opportunity to take advantage of this and to buy well. Want you to go ahead and consider joining us if you haven't already. You'll get to see myself and our preferred client relations manager, Brian Zweig, down in New Orleans. We'll be there from November 1st through the 4th for Brian London's New Orleans Investment Conference. And I'll also be down in South Beach for Joel Nagel's 27th Annual President's Week Conference, and that'll be in South Beach in Miami from November 11th to the 15th. If you haven't already, please go ahead and sign up, join us there, and you're going to get to hear from me and a whole host of other folks to get an idea of what's going on in these markets and how to protect your assets in this environment. As always, we want you to go ahead and subscribe to us on the YouTube channel, like us, send us your comments and questions, subscribe to our social media platforms, sign up for our free monthly newsletter information line and our twice weekly free alerts, always something interesting. But don't ever forget that getting rich starts with keeping what's yours.